We're surrounded by all this amazing tech, aren't we? Phones, global networks,
Yeah.
it's everywhere. But underneath all that shiny innovation, there's this whole hidden world of specialized materials, kind of the invisible engines driving it all.
That's exactly right. And today, we're sort of pulling back the curtain on one company right in the thick of it. AXT Inc., ticker AXTI. They're really deep into the science of these crucial substrates, things like indium phosphide, gallium arsenide, and germanium.
Right, and these aren't your everyday silicon chips that everyone knows about. These are the materials you turn to when silicon, well, hits its limits. Isn't that the idea?
Precisely. Yeah. We're talking photonics, ultra-fast data, advanced communications, basically where performance is absolutely key.
Okay. And you're saying finding direct public competitors, companies doing exactly the same thing, is tricky.
It is, yeah. A lot of the big players here, like, say, Sumitomo Electric or Freiberger Compound Materials, they're either private companies or just one part of a much, much larger corporation. So it's hard to do a perfect apples to apples.
Got it. So for this deep dive, our mission isn't necessarily finding identical twins. It's more about understanding where AXT fits in the whole competitive picture, right?
Exactly. We'll look at public companies that overlap significantly, maybe in the materials they use, the markets they sell into, or just the general tech space they operate in.
And we're zeroing in on Coherent Core, that's COHR, and MACOM Technology Solutions, MTSI, as our main reference points.
That's the plan. Coherent, especially now after merging with ISI, is a huge vertically integrated player in this compound semiconductor world.
Right.
And MACOM, well, they're a major customer for these kinds of advanced substrates, but their choices really shape the demand. They influence the whole ecosystem.
Okay, makes sense. So the plan is look back 5 years first, say 2019 to 2024, see how AXT and these others performed.
Yep. And then we'll look ahead maybe the next 5 years, 2025 to 2029. We'll focus on market trends, big tech shifts like this, move to bigger wafer sizes everyone's talking about, and the specific challenges and maybe opportunities facing AXT.
Sort of putting AXT in context, seeing how the bigger industry currents affect them.
You got it. Understanding their place in the whole compound semiconductor story.
All right, let's get down to the fundamentals then. AXT itself. Paint us a picture. What's their core business?
So AXT is fundamentally a material science company. Their whole game is designing, developing, making, and selling these critical substrates. Indium phosphide, ENP, gallium arsenide, GAAs, and germanium.
These are the base layers, the foundation wafers.
Exactly. The single crystal foundation that more complex chips, the semiconductor and optoelectronic devices, are built on top of.
And why not just stick with silicon? What's so special about NMP, GAAs, and G?
Well, silicon's amazing, no doubt, but it has limits. These compound semiconductors, they offer superior performance for certain jobs. Take indium phosphide NMP. It's incredibly good at turning electricity into light and back again, really fast and efficiently.
So light and speed.
Right. Think high-speed internet, the fiber optics carrying all that data. Inside data centers, those optical links. Often NMT is involved, sometimes working alongside silicon photonics. And 5G infrastructure needs it. Fiber optic lasers, lots of applications.
Okay, NMP is speed and light. What about gallium arsenide, GAs?
GAs kind of has two main personalities. They're semi-insulating GAs that's perfect for power amplifiers and wireless stuff, Wi-Fi, IoT devices, satellite comms.
Your phone signal, basically.
Pretty much, yeah. And high-frequency transistors, defense uses it a lot. Then you have semiconducting GAs. That's the engine behind high-brightness LEDs, backlights for screens, car lights.
Okay.
Lasers and printers often use it. And the really exciting potential is in next-gen displays, like micro-LEDs. GAs could be huge there.
Interesting. And germanium. Feels like you hear less about GA.
Maybe less in everyday gadgets, yeah. But it's still vital for high-performance niche applications. Think satellites, they need ultra-efficient solar cells. Those often use germanium substrates and multi-junction cells to squeeze out every bit of power.
Makes sense. Weight and efficiency are everything up there.
Exactly. You also see it in some ground-based concentrated solar power systems and specific types of very sensitive optical sensors and detectors. Still very important stuff.
So AXT is definitely playing in some high-tech, specialized areas. What about how they make these things? Anything unique there?
They really promote their proprietary VGF technique, vertical gradient freeze.
VGF, okay.
Yeah. The idea is it allows for a more controlled, more uniform freezing of the molten material as the crystal grows. They argue this leads to fewer imperfections, fewer defects in the crystal structure.
And that's critical for performance.
Absolutely critical,
Yeah.
especially for the kind of high-end devices their customers are building. Lower defects generally means better performance, better yields for the device makers. They claim it gives them an edge in quality.
Sounds like a potential advantage. And where is this manufacturing actually happening?
Well, their HQ, admin, sales, marketing, that's in Fremont, California, but all the manufacturing, that happens in China through their subsidiary called Tongmei.
Ah, okay. So a U.S. company, but manufacturing is entirely China-based.
That's the structure. It likely offers cost advantages, facilities, labor, but it also centralizes their production geographically.
And does their China connection stop there?
Actually, no, it goes deeper. Through Tongmei and some other related entities, AXT actually owns parts of about 10 Chinese companies that produce the raw materials they need.
Raw materials.
Yeah.
Like the gallium and arsenic itself.
Exactly. Gallium, arsenic, germanium dioxide, even specialized stuff like the pyrolytic boron nitride, the PBN crucibles they use in the VGF process, and boron oxide.
Wow. So they have some vertical integration on the raw material side, but again, heavily concentrated in China.
Right. They use a lot of it internally, obviously, but they also sell some purified gallium and those PBN crucibles on the open market, too. So they're players in that materials supply chain as well.
Okay, let's talk financials then.
Yeah.
What's the bottom line look like for AXT right now?
Well, looking at the trailing 12 months, revenue is around $99 million, which sounds okay, but they're not profitable. Net income is actually negative, around minus $11.8 million. That gives them a negative profit margin, almost 12%.
Ouch. Not great.
No. And their market cap reflects that. It's pretty small for a public semiconductor company, sort of in the $50 to $60 million range, and no dividends currently.
So promising markets, but struggling financially. That's a tough spot. It really highlights the challenge for these specialized players, doesn't it? Lacking that huge scale.
It really does. It suggests they might be facing serious pricing pressure, or maybe their costs are high, or they just don't have the economies of scale that larger, more integrated companies do. Navigating R&D costs in advanced materials is also really expensive.
What could be driving those financial difficulties specifically?
It's likely a mix of things. Definitely intense competition from bigger players. Their own production scale might limit cost efficiencies, maybe operational inefficiencies somewhere, high R&D spend. It's hard to pinpoint from the outside, but the result is clear on the bottom line.
And that heavy reliance on China for manufacturing and raw materials, that has to add risk too, doesn't it? Financial and operational.
Oh, absolutely. That's a major factor. Geopolitics is huge here. Think about trade tensions. The potential for more export controls. We already saw China restrict gallium exports recently, right?
Yeah, that made headlines.
Any shifts in Chinese regulations or policy could hit AXT harder than companies with more diversified operations. It impacts supply chain certainty, investor confidence, maybe even access to capital.
Okay, so we've got a pretty good handle on AXT now. The tech, the structure, the financial picture, the risks. Let's bring in those competitors again. Remind us why we picked Coherent and Inhap.
Right. So since there weren't perfect clones of AXT publicly traded, we looked for companies with significant overlap. That means compound semiconductor materials, even if they do more than just NNP, GAs, and G, like silicon carbide or GaN. Serving similar high-performance markets or just being influential players in the same tech ecosystem AXT lives in. We deliberately excluded, say, pure equipment makers or companies that only make the final devices downstream, though they are part of the competitive pressure, of course.
Makes sense. Focus on the material-centric players or key influencers. So Coherent first, what makes them such a key rival?
Coherent, especially after swallowing Tegra, is just massive. They're a powerhouse. Their portfolio is broad: silicon carbide, SiC, ENP, GAs. They cover a lot of ground.
So they compete directly with AXT on NNP and GAs, but also do SiC, which AXT doesn't.
Exactly. They're super strong in photonics, telecom, datacom, sensing plus communications, power electronics, and they are heavily vertically integrated. They handle more of the process chain internally, from raw materials sometimes all the way to systems.
And you mentioned silicon carbide. That's a big market AXT isn't in.
A huge market, especially with electric vehicles. Coherent is a leader in CC substrates. So yeah, while they compete with AXT and ENP and GS markets, their scale and diversification, especially with CC, puts them in a totally different league financially. We're talking multi-billion-dollar market cap versus AXT's 50-something million. It's a David and Goliath situation in terms of size.
Right. A true industry giant. Now, MACOM. You said they're more of a customer, but still key. Why?
MACOM is crucial because they use these advanced substrates. They design and make high-performance chips, analog, RF, microwave, millimeter wave,
The
photonics.
stuff that goes on the substrate.
Precisely. And they're big consumers of GAs and ENP for things like 5G gear, data centers, industrial tech, aerospace, defense. So MACOM's success, their technology choices, that directly drives demand for what AXT makes.
The roadmap influences AXT's market.
Totally. Plus, MACOM isn't just sitting back. They're active in the compound semi landscape themselves. Look at their acquisition of Wolfspeed's RF gallium nitride JN business. That shows they're shaping the technology direction too. Their decisions ripple upstream to substrate guys like AXT.
Okay, I see the connection. And you mentioned IQE briefly, too. Where do they fit?
IQE is interesting. They're based in the UK, and they're a leading independent epi-wafer foundry.
Epi-wafer.
Yeah, epitaxy. It's a super sophisticated process where you grow ultra-thin, precisely controlled crystalline layers on top of the base substrate. Those layers are what make the device actually work. So IQE takes substrates, potentially including ones from AXT, and adds these critical epi layers.
So they're a step between AXT and the final device maker.
Often, yes. They serve many of the same markets, photonics, wireless, etc., so they're a key part of the value chain, and their health is tied to the substrate market's health.
Man, it really shows how complex this semiconductor supply chain is. AXT is this specialized, smaller company trying to navigate a field with these huge, diversified giants and other crucial players like IQE. What does that mean for AXT, practically speaking?
It means facing significant challenges. Economies of scale are a big one. Larger companies can often produce more cheaply. R&D investment is another. Bigger companies have deeper pockets for developing the next big thing. Market influence, pricing power. It's tough being the smaller player.
And the risk of competitors integrating vertically, or big customers deciding to make their own substrates.
That's always lurking, yeah. If a coherent decides to push more into AXT's specific niches, or if a massive device maker invests in captive substrate production, that adds huge pressure. It can squeeze margins and limit market access for a company like AXT.
Okay, let's shift gears and look back. The last 5 years, say 2019 to 2024, that was a pretty wild ride for the semiconductor market, wasn't it?
Oh, definitely. You had the big 5G rollout starting, huge growth in data centers, then the pandemic hit, causing massive disruptions and demand shifts, followed by market corrections. Really volatile.
So how did AXT, Coherent, and MACOM fare through all that turbulence? Let's start with revenue growth.
It's a bit varied. Coherent's numbers are heavily skewed by that massive TI-VI merger, so isolating organic growth is tricky. But you can bet they saw strong growth in psych, driven by EVs, and probably solid performance in photonics for datacom.
Okay, and MACOM.
MACOM's revenue likely tracked the cycles in their key markets more closely. Pulses in 5G spending, data center buildouts, defense budgets. When those were up, MACOM probably did well. More cyclical.
That's AXT. How did their top line look?
AXT seems to have been more volatile and maybe less robust overall. Their TTM revenue, around $99 million, despite being in these promising markets, suggests growth was maybe more constrained, perhaps tied to specific customer projects rather than riding broad market waves. Their smaller scale just likely limited their ability to capture growth compared to a giant like Coherent.
Okay, revenue tells part of the story. What about profitability? The bottom line.
Here the differences are really stark. AXT, as we mentioned, has been consistently unprofitable, negative net income, negative margins. That strongly points to ongoing issues, whether it's pricing pressure, lack of scale, high costs, maybe the mix of products they sell. It's a persistent problem.
Or is Coherent and MACOM?
Coherent's profitability was definitely hit by the merger costs. Integrating TI-SI was a massive undertaking. But underneath that, their position in booming markets like SILE and photonics suggests strong potential profit drivers once things settle. MACOM, being a device maker in competitive fields, likely saw margins fluctuate more, depending on product cycles and market conditions.
So the key difference is AXT struggling at the fundamental substrate level, while the others are further down the chain or in faster-growing material segments like SILES.
That's a good way to put it, yeah. Different positions in the value chain, different margin pressures, and critically, AXT missed out on that big SIAS growth wave that benefited Coherent significantly.
And how did the stock market react? Valuation, stock performance over those 5 years.
Well, AXT significantly underperformed. The stock's been highly volatile, lost a lot of value, leading to that current small market cap, around $50–60 million.
While Coherent and MACOM.
Multi-billion-dollar companies. Their stocks had their ups and downs too, reflecting their own cycles and news, but generally maintained valuations orders of magnitude higher than AXT. AXT's low valuation clearly reflects investor concerns, the losses, the competition, that heavy China reliance we talked about.
Were there any landmark events during that 2019-2024 period that really shaped
Oh,
things?
yeah. The Taikavai Coherent merger was absolutely huge, reshaped the landscape. We also saw a lot more focus on strategic partnerships, especially around securing supply for things like Sync Infineon, and Coherent had a big Syncy deal, for example.
Capacity expansions, too.
Definitely. Big investments in building out capacity, especially for SiC and Jinjiang, showing where the industry saw future demand. And the tech itself kept evolving that push to larger wafers, wider adoption of Jan for power and RF. Those were major underlying trends.
And AXT, focused on NPGSJ, kind of sat out the main silicon boom during that time.
Largely, yes, which underscores how critical your material focus and market timing are in this industry.
Right. So this compound semiconductor market isn't just one thing. You mentioned different segments growing at different rates. Can you break that down a bit more?
Sure. Think about the main application areas. You've got power electronics, that's where SiC and GaN are really exploding thanks to EVs, renewables, industrial power. Huge growth there.
Okay, power. What else?
RF electronics radio frequency, that's GACE and GaN territory. Think smartphones, Wi-Fi, 5G base stations, radar defense systems. Still very important.
And photonics.
Yep, photonics. That relies heavily on NNP and also some GAs. This is fiber optics data centers, especially now with AI needing insane data speeds and things like 3D sensing, like facial recognition on phones.
And LEDs displays.
Right. Traditionally, GAs for standard LEDs. But the big potential everyone's watching is micro LEDs for next-gen displays. If that takes off, it could be a massive volume driver potentially for GAs.
So what are the actual market forecasts saying? Strong growth overall.
Generally, yes, very positive. The overall compound semiconductor substrate market is projected to grow significantly. We're seeing estimates suggesting it could reach somewhere between, say, $2.4 billion and maybe $3.3 billion by the late 2020s, like 2027, 2029.
Wow, that's substantial growth. What kind of TG are we talking?
The compound annual growth rates being thrown around are often in the mid-teens, maybe 16, 17% overall for the substrate market, but some segments are expected to be even hotter.
Like which ones?
SiC and NP substrates are often highlighted for particularly strong growth. Projections there are sometimes in the 20–25% CAGR range over the next few years.
So AXT is positioned for that NMP growth, driven by photonics and AI, and maybe JAS if micro-LED pans out but misses the SiC piece.
That's the picture, yeah. Their fortunes are tied to NMP and JAS market trajectories.
You keep mentioning the move to larger wafer diameters. Why is that such a big deal, and where does AXT stand?
It's all about cost, fundamentally. Moving from, say, 4-inch or 6-inch wafers to 8-inch or even larger means you can make way more chips or substrates per manufacturing run. That drastically lowers the cost per unit.
Makes sense. More chips per pizza, basically.
Exactly. So in 6E, the leaders are already pushing hard into 8-inch. GaN for power is also moving to 8-inch. RF GaN is maybe more on 150 millimeters or 6-inch, but moving up.
And for AXT's materials, JASs and NNP.
For JAS, there's a definite push toward 8-inch, largely driven by that micro-LED hope. AXT, actually, and Freiberger have both shown they can make 8-inch JAS wafers.
Okay, so they have the capability, at least demonstrably. What about NNP?
NNP is lagging a bit. 6-inch is still kind of the leading edge for high volume. Getting to 8-inch NMP is technically really challenging, but whoever cracks it reliably and cost-effectively could have a big advantage. It's a major hurdle, but also a big opportunity.
So AXT's competitiveness really hinges on scaling their VGF process for bigger wafers. 6-inch ENP, maybe 8-inch GAs.
Absolutely. They need to do it with good yields, meaning not too many defects, and at a cost that competes. If they can't keep pace with the industry on wafer size, they risk being confined to smaller niche markets where older sizes are still acceptable. And quality remains key, especially as silicon photonics keeps improving and potentially challenging NNP in some areas.
It sounds incredibly competitive. Who are the other big players we should be aware of beyond Coherent and McComm?
Well, you have the established giants like Sumitomo Electric and Freiberger alongside Coherent. Then you have a growing number of Chinese competitors entering the market, often with strong government backing and potentially aggressive pricing strategies.
Or pricing pressure.
Likely, yes. You also have other specialized players focusing on specific niches, those epi-wafer foundries like IQE we mentioned, and always the possibility of the big device makers deciding to bring some substrate production in-house, becoming captive suppliers for themselves.
So it's crowded, competitive, likely tough on pricing. puts AXT's profitability struggles into context.
Exactly. It's a tough neighborhood.
And we saw all that M&A activity, Coherent T6, Lumentum Neophotonics, Infineon buying GaN systems on semi-grabbing GTAT, AIM-MACOM taking Wolfspeed's RF GaN. What's the impact of all that consolidation?
It's creating fewer, but much larger and stronger competitors. Companies with broader tech portfolios, more financial muscle, wider market reach. It really highlights how valuable this compound semi-tech is strategically.
And it probably puts even more pressure on smaller, specialized companies like AXT.
For sure, they need to differentiate strongly through technology or find a niche they can dominate, or they risk getting squeezed out or maybe becoming an acquisition target themselves. Scale matters more and more.
And we can't forget the geopolitical angle, especially AXT's China concentration. How big a factor is that looking forward?
It's potentially huge and multifaceted. You've got the ongoing U.S.-China trade friction, the risk of more export controls like on gallium or maybe germanium, changes in Chinese industrial policy, even just logistics and supply chain disruptions.
And the global push for supply chain resilience. Does that hurt AXT?
It could, yeah. As governments and companies worldwide push to diversify supply chains away from single points of failure or geopolitical hotspots, a company with manufacturing and key raw materials so heavily concentrated in China might be seen as higher risk. Competitors with fabs or suppliers in multiple regions might gain an advantage, especially for sensitive applications like defense. Customers might start demanding more geographic diversity.
Okay, so let's bring it all together and look forward. The next 5 years, 2025 to 2029, what's the general economic feeling for compound semis?
Overall, still very positive. The consensus is continued strong growth for the sector as a whole. The underlying demand drivers are just really powerful.
And remind us of those key drivers again.
Top of the list is AI and machine learning. The insatiable demand for data processing means huge growth for optical interconnects in data centers, which heavily relies on ENP. Maybe some Jazz VCS cells, too, for shorter links.
Okay, AI is number one.
Then you've got ongoing 5G deployment and the eventual move to 6G. That keeps demand strong for GAs and GaN in the RF side, and NMP for the network backbone, the backhaul.
Automotive.
Definitely. Electrification means tons of demand for SEXLA-A and GaN power electronics. Plus, advanced driver assist systems and potential autonomous driving could use GAs or NMP in LiDAR sensors.
Micro LEDs. Still a driver.
Still a potential massive driver. If, and it's still an if, micro-LED displays hit the mainstream for TVs, watches, phones, that could require enormous volumes of high-quality 8-inch GAs wafers.
And defense.
Always a steady customer.
Yeah.
Defense and aerospace need the high performance of GAs and GaN for advanced radar, secure communications, electronic warfare, specialized sensors. That demand isn't going away.
So with those drivers in mind, how do Coherent and MACOM look positioned for the next 5 years?
Coherent seems very well positioned, honestly. Their scale, their diversification across CND, IMP, GAAs, they can play in almost all these growth areas. Big growth expected in CIG for auto and industrial, and photonics for AI datacom.
Risks for Coherent.
Main risks are probably executing on the huge integration after the merger, staying ahead technologically across so many different fronts, and maybe rising competition, especially from China and CK, but overall they look strong.
And MACOM.
MACOM's outlook is really tied to spending cycles in telecom, datacom, and defense. Getting that RF GaN business from Wolfspeed definitely helps strengthen their position in high-power RF. Risks for them are mostly the fierce competition in the device market and the cyclical nature of their big customer spending.
Okay, now the big question, AXT.
Sure.
What's their outlook for 2025, 2029?
It's really high risk, potentially high reward. The upside is definitely there. That strong projected growth in ENP for AI optics is right in their wheelhouse. And if micro-LED takes off, the GIA's opportunity could be transformative for them.
Oh, lots of ifs.
Exactly. Realizing that potential depends entirely on them successfully scaling up manufacturing, getting 6-inch NNP and maybe 8-inch GAs running smoothly with good yields and costs. They need to win major designs in those growth applications. And critically, they have to find a path to profitability.
And the risks remain.
All the ones we discussed. Intense competition from bigger, richer players, the execution risk on scaling their VGF tech, the threat of silicon photonics maybe eating into some NNP markets, their limited funding due to current losses, and that big geopolitical cloud hanging over their China operations.
It's interesting you mentioned the stock price versus analyst targets. Seems like the market is wary, but some analysts see that upside potential.
Yeah, there's definitely a tension there. The low stock price reflects the very real risks and current losses. The more optimistic analyst targets are likely focused on that market growth potential in AMP and JAs if AXT can execute. It highlights the speculative nature of the stock right now.
So summing up the next 5 years, what are the big opportunities across the board?
It's really about leveraging what compound semis do best, enabling higher speeds for AI, boosting efficiency for EVs and power systems, creating next-gen displays, enhancing sensing, basically powering the next wave of tech innovation where silicon falls short.
And the major risks for everyone in this space.
Cyclical downturns hitting demand, brutal price competition, especially from potentially subsidized players, failing to execute on tricky technology transitions like larger wafers, geopolitical disruptions messing with supply chains or market access, and always the long-term threat of some new material or technology emerging as a substitute.
So it really feels like success in the next 5 years comes down to having differentiated tech, a strong balance sheet, diverse markets, a resilient supply chain, and nailing those manufacturing transitions. Platform capabilities are key.
Absolutely. You need a solid platform, quality materials, the right wafer sizes, cost effectiveness. And for AXT, the challenge is scaling their specialized platform effectively enough to compete against those much larger players.
Yeah, innovation and execution seem like the name of the game.
Couldn't agree more. Those will be the differentiators.
Well, it's definitely clear AXT operates in a space that's absolutely critical, but wow, is it competitive?
It really is. These materials might be invisible to most people, but they are foundational to so much of the tech shaping our future.
And the potential in the markets they serve, AI, micro LEDs, it's incredibly exciting, even with all the challenges. So for you listening in, you really get a sense of the incredible complexity behind that sleek smartphone or that fast internet connection. It relies on this deep, often hidden layer of specialized material science.
It's a fascinating ecosystem, incredibly interconnected and complex.
So here's a final thought to chew on. When you consider everything we've discussed, the geopolitical landscape, the intense competition, the technological hurdles, but also the critical need for these materials, what do you think is the single biggest challenge AXT needs to conquer to truly unlock its potential over these next 5 crucial years?
That's a great question. Really gets to the core of the strategic puzzle they need to solve.
Thanks for taking this deep dive with us into this really vital and honestly pretty fascinating corner of the tech world.